Hey everybody, Rivian released their Q3 earnings and it's a really solid report. They beat on both the top and bottom line and posted a surprise gross profit of $24 million versus an expected gross loss of $39 million. Cash burn was also pretty minimal. They ended the quarter with $7.1 billion in cash compared to $7.5 billion in Q2. In this video, I'm going to walk through the financials in detail, cover the key updates for management on R2, as well as their guidance for Q4 and 2026. Let's get into it. All right, let's start with the automotive side of the business. So I put together this breakdown of all the different components of cost of revenue. These are the same numbers that you'll see in the shareholder letter, but separated out by line item so that we can track the progress over time. And if you look over at the far right column for Q3, you'll see that every single component of cost of revenue has declined compared to Q2. So lots of cost reductions, really pretty impressive result by the Rivian team. And a couple things stand out to me in these numbers. The first is the warranty accruals, which is what Rivian uses to estimate the warranty expense over the life of the vehicle. And you can see that it dropped from $6,000 per vehicle in Q2 down to $2,800, which is an all-time low. So really good progress there. Could be that this was related to the model year 2026 launch, which was around this time. They may have made some changes that resulted in lower repair or replacement costs over time. The other thing that stands out to me is the cost reduction in the bill of materials. And this is actually kind of crazy because they had a tariff headwind in Q3 of roughly $2,000 per vehicle, but they were still able to reduce this line item by several $1,000s. The last thing that I'll point out here is that if you compare Q3 with Q1, you'll see the cost of revenue per vehicle is pretty much the same. But the difference is that in Q1 benefited from two one-off adjustments. The first was LC&RV, which is just an accounting adjustment on inventory. And the second is they made an adjustment to their pre-existing warranties. They probably had been too conservative in their previous estimates, and so they basically just adjusted the warranty balance in Q1, and that came in to the cost of revenues, but it didn't really have anything to do with the Q1 results themselves. So if you control for these two things and then track the cost of revenue per unit delivered over time, you'll actually see that Q3 was an all-time low. So to me, this shows the Rivian team is executing really well, and I expect they'll continue to bring down costs over time. All right, let's move over to the software and services side of the business. In Q3, we saw about $416 million in revenue, which is up roughly 11% compared to last quarter. And a lot of this growth came from the joint venture with Volkswagen, which is much higher margin than the core software and services, and explains why we saw the overall margin increase from 34.3% in Q2 to 37% in Q3. But what's interesting is even if you adjust out the impact of the JV, we still see an improvement in gross margin in the core segment, which includes charging, connectivity, subscriptions, remarketing, and of course service. So overall, this is a really strong quarter for software and services. You love to see both top line growth and margin improvement. And I expect we're going to continue seeing increases every quarter because every single category within the segment is growing. For the joint venture, management has guided to a steady increase in revenues through 2028 as they deliver against the development milestones for the Volkswagen Group. And then on the core side of the business, this is largely a function of the size of the fleet, which of course grows every day. And they haven't even started charging for the autonomy platform yet, which I expect will be around early Q1 following the autonomy day that they'll start charging for some of these features. I think in general, this side of the business is underappreciated by investors. If you go back to the beginning of the year during the Q4 earnings call, Claire McDonough, the CFO, gave some directional guidance on what revenue and gross margins could look like for software and services. And she said to expect north of $1 billion in revenue and roughly 30% gross margin. And in the first 9 months of 2025, we've already seen 1.1 billion in revenue at a 36% overall gross margin. So again, really, really bullish on this part of the business. Okay, let's move back over to the shareholder letter and take a quick look at operating expenses. Opex came in at about $1 billion for Q3 compared to $908 million in Q2. So quite a big increase, although we did get some color from management as to what's driving this. The increase in R&D was due to R2 development and increased compute costs for autonomy training. And on SG&A, this was primarily driven by the expansion of the sales and service infrastructure to support the ramp of R2 next year. Next, let's review management's outlook for the rest of the year. Rivian reaffirmed all their previous guidance for 2025, which was great news. I'm sure a lot of investors were relieved to hear this, given that they'd cut guidance a few times this year already, including most recently in the October delivery report. So it's great to see that they're sticking to their guidance now that we're about a month into Q4. For adjusted EBITDA specifically, I think this is pretty significant because it implies a 75 million improvement from Q3 to Q4. But I should say that that's at the midpoint of the range, and it's a pretty wide range. So we'll just have to wait and see how the results come in. But directionally, this is positive news and means that they're very likely to hit their target of a positive gross profit for the year. All right, moving on to R2. We got a lot of exciting updates. Rivian has completed the factory and supplier park at Normal. They're in the process of commissioning the robots in the body shop. And most importantly, they're on track to produce manufacturing validation builds by the end of the year. I think if they can hit that target, then we're likely to see a start of production around March or April. RJ also mentioned in the earnings call that there's going to be a launch event for R2 in the early part of next year, where they'll go over the trims, powertrain configurations, and pricing. So that's something for folks to be excited about, probably in the January, February timeframe. So it's great to hear that everything with R2 is on track. I think we're going to start seeing units roll off the line sooner than most expect. Another major update during the call was on tariffs. So if you recall from the previous video, I mentioned that the recent policy change on tariffs was significant for Rivian because it extends the tariff offset for 5 years and maintains it at the higher level of 3.75% of MSRP. And in the earnings call, we found out just how significant it is. RJ said, previously we have guided to say the effective tariffs have been a couple $1,000s, and what we would now guide to say is that it's a few $100s of tariff cost per vehicle. In terms of when we would see that flow through the financials, Claire also added that there will be some step down in Q4, but it'll be a quarter or two before the full benefits realized. Management shared some additional details on the call, mostly around their Q4 and 2026 outlook. For Q4, CapEx is going to step up, should be roughly 600 million per their full year guidance. We'll also see cash burn overall increase as working capital is expected to consume cash, whereas in the last few quarters it's been generating cash as they've kind of burned through inventory. For operating expenses, they guided to a slight decrease in SG&A, while R&D is expected to increase in the lead up to R2, but then taper off over the course of 2026. In terms of capital, they reaffirmed that they expect to receive $2 billion from Volkswagen next year, and also to draw on the DOE loan to support Georgia construction once the conditions on the loan are met. Lastly, they reaffirmed positive gross margins on R2 by the end of next year. Given everything we've heard from management, I wanted to go ahead and update this liquidity forecast, which I shared with you guys in the last video. This projects out what the cash balance looks like at the end of 2026, based off of some assumptions around operating expenses, CapEx, as well as the incremental capital from VW and the DOE. I'm seeing that Rivian will have about 3.1 billion in cash at the end of next year, or 3.7 billion in total liquidity, including the ABL facility. Of course, I've made a number of assumptions here. I'm expecting cash gross margin to be roughly break even, which is about where things stand today. R2 will be generating positive cash flow by the end of the year, but will be negative in the early part of the ramp. I'm expecting significant working capital consumption in Q4 and at least the first couple quarters of next year, which is consistent with management's guidance. So I think this looks pretty reasonable. As long as they're able to draw on the DOE loan around Q3, then they shouldn't need to raise any additional capital. So that's it for the Q3 earnings deep dive. As I mentioned, this was a really strong report, probably Rivian's best quarter yet, and I'm really excited for what's to come. We've got Autonomy Day on December 11th, and the launch of R2 is just a few months away. If you enjoyed this video, please like and subscribe, and I'll see you on the next deep dive.